It's a force for good.
Money Talks.
Money Talks.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Hello and welcome to Money Talks here on 92.3 Inspiration FM Smart. Uzechi is my name. Money Talks is a financial literacy program that is brought to you by CFA Society Nigeria. This is their contribution to the society, especially as it has to do with financial literacy. So you're welcome on board wherever you're joining us from this evening. Tonight, we will be talking about FinTech as an enabler of financial inclusion. We've been talking about financial inclusion for some time now, so we're taking it to another level this evening. Again, FinTech as an enabler of financial inclusion is what we're talking about this evening. We have a professional in the house. His name is Razaq Ahmed. Razaq Ahmed, CFA. We need to put that right there. Razaq Ahmed is the founder of Cowrywise, and it's a fintech organization. Razaq, good evening to you, and thank you so much for joining us on Money Talks this evening.
Thank you, Smart. It's an honor to be here.
Good to see you. Razaq Ahmed is the Chief Executive Officer and the co-founder at Cowrywise. Cowrywise is a fund management firm registered by the Securities and Exchange Commission, SEC. Prior to that, Razaq was an investment analyst with Mary Stem and Vetiva. That's a business economist. He was with the Shell Petroleum Development Company of Nigeria before he co-founded Cowrywise. Razaq graduated with a first class in economics from the prestigious Obafemi Awolowo University and is a CFA charter holder. He volunteers with CFA Society Nigeria in the areas of building future professionals and advocacy for financial literacy. I told you he's a professional. Once again, let's make welcome Razaq Ahmed to the program this evening.
Thank you, Smart.
So good to have you. So this evening we're discussing FinTech as an enabler of financial inclusion. Everywhere you turn, these days you hear people talking about FinTech, including those who don't know what FinTech actually means. So let's start from there, Razaq. This word FinTech is widely used, it's common. Let's start from you telling us what FinTech is all about.
Yeah, thank you, Smart. I think if many people are talking about FinTech, I think that's the first step to knowing what FinTech is, even though the detail might not be well known out there as much as we would love it to be. So in simple terms, FinTech is simply the application of technology to enable the delivery of financial services. And frankly, it is not new, because even if you look at the legacy financial institutions, to some extent, they've been applying technology in delivering financial services, right? So what FinTech is doing differently is just the scale of application of technology in delivering that financial service, right? And at the core of this is the financial services being delivered. That doesn't change. It has been around since 1900 or even way back.
Wow.
For example, mutual fund is mutual fund, right? Investment is investment. Savings are savings, right? What really differentiates FinTech in this era from how investment or savings or insurance were being done years back is simply the enormity of technology application in making those services available to the average man. If you remember clearly, say in the early 2000s or 2006, 2007, 2004, 2005, after the banking consolidation in Nigeria, when Nigerian banks were raising a lot of money and so on and so forth. If you look at most of the use of funds, the use of funds largely was based on branch expansion. And if you look at the intent behind branch expansion, investing in branch, is practically to ensure that you have a lot more people included in the financial service ecosystem, right? But today, I doubt any bank will raise money today with the intent of building bank branches. And that is primarily because the mode of delivery has changed, right? The mode of delivery has moved from brick and mortar branches to technology, because technology is now everywhere. We live digitally. We even buy food digitally, right?
Yes.
we move digitally.
Exactly.
So digital lifestyle is something that is more pronounced today than it was years back. And the rise of fintech is just a reflection of that. It's a reflection of our time. It's a reflection of the moment, right? So basically, when you look at fintech in a simple term, it is just the application of technology to make financial services available to the mass market. And the word mass market is very vital, primarily because it speaks to the advantages that technology can offer, right? Technology can enable you reach out to millions of people, can enable you scale at an efficient cost compared to other means like building brand branches. So, for example, if you're operating a commercial bank in Nigeria today, and you want to be present without let's assume an extreme case where you just don't want to apply any technology at all, even though it's not realistic, but it will pass the message across. If you don't want to apply any technology at all, you want to reach out to millions of people in Nigeria as a bank, the implication is that you have to open branches almost everywhere, right? That is practically uneconomical, right? I don't think any CFO, any CEO will approve that kind of expansion strategy, right? So what technology enables you to do is to be able to reach out to millions of people, reach out to build scale at an efficient cost. And that's what fintech is like.
So when we say fintech, the layman there we want to assume that is a coming together of
two words:
finances, of the financial sector and technology. So the use of technology in the financial sector,
correct,
for the benefit of many people. I'm sure everybody would have got that now. So from this explanation you have given, Razaq, let's talk about how you would say fintech then can facilitate economic activities. Like on this program, we've been talking about savings, we've been talking about investment, we've been talking about insurance, pensions, and all of that. So how can fintech facilitate these economic activities, especially for the retail customer that you mentioned right there?
Yeah, so there is a peculiarity to the Nigerian market specifically, right? That peculiarity is that a good number of people are either excluded, 100% excluded, or they are underserved when it comes to basic financial services. And I will break that down into different verticals, right? Say regular banking service like payments, savings, credits, insurance, wealth management. So these are core financial services that an average person should have access to. At the risk of exposing your privacy, have you ever had access to banking loan in Nigeria from a commercial bank?
From a commercial bank?
Yeah.
No. I haven't had need to do that.
Okay.
Yeah.
That is because you have not been made to understand why you should do that, right? So most times what we have in this part of the world is that a good number of people have access to, say, elementary banking. I want to put it that way, like payments. I receive money and then I send
deposit
money.
money.
I receive money, I
send money.
Right. And if you look at the total number of people that have been banked in that simple definition, right? If you're to use the bank verification number, which is a unique identifier, that would be less than 60 million people, right? And banking has been in Nigeria for more than 100 years, right? So, and we have about 60 million people who have been banked at the surface level. Then if you take it further to look at how many people have access to credit, which is an important part of banking, right? That number is actually very, very abysmal. Then if you now take a step further, how many people have insurance, right? And normally, insurance should be based on human psychology. Insurance should be something you should even go for, and there is a regulation around it as well that enforces, people having insurance, housing, cars, life insurance, and so much and so much. But people really don't have those services. And then talk about investments. How many people have access to investments today? Right? They are very limited. So the question is, there is a problem at hand. The problem of under penetration, the problem of being underserved, the problem of millions of people being excluded from having access to financial services. Then the question is, how do you solve that problem? As at today, the primary means to solve that problem at scale, at an efficient economic spot, is using technology. And this is not restricted to just fintech only, right? Even legacy financial institutions can also leverage technology to make those financial services available to millions of people. And the journey is made a lot easier with technology because an average person, well, or a good number of people, have a piece of that technology.
But some people still have their skepticism around technology. They fear that.
I'll come to that.
Yeah.
I'll come to that. So what makes it easier to reach out to millions easily with technology is because a lot of people already have access to that technology. And I'm talking about technology now without being, in a very simple term, a good number of people have access to phone. And that's a piece of that technology.
Yeah.
Even if you don't have access to internet, which is growing, by the way, you can make use of USSD, right? So the rise of USSD channel as a means of payments, which is an important part of financial inclusion, is commendable, right? So because a lot of people have access to that piece of technology, it is extremely easier for you to leverage that scale to reach out to millions of people instead of building brick and mortar to accommodate a lot of people. And that is the advantage that financial technology enables, to enable large number of people have access to that. Then we now come to the issue of the concerns.
We'll get to that in just a bit.
Okay.
Just to let the listener know, in case you're joining us now, we're having this conversation, and it's around fintech as an enabler of financial inclusion. That's what we're talking about here on Money Talks this Monday. That is May Day celebration in Nigeria, but we are at work talking about this. The guest on the program this evening is no other than Razaq Ahmed. He's the Chief Executive Officer and co-founder Cowrywise. Cowrywise is a fund management firm registered by the Securities and Exchange Commission. If you have questions already, or you want to be part of the broadcast, you want to make a clarification, you want to ask a question for the professional Razaq Ahmed here to answer, you can join us via the telephone lines 0817 313 6193. That's the number to call, 0817 313 6193. You can also use that number to send us a message on WhatsApp. That number working for WhatsApp and for voice calls in the studio here this evening. Again, 0817 313 6193. You can telephone us there, or you can also send us messages via the WhatsApp portal. We'll get you. Before we just go to the next phase of the program, where you have a caller on the line this evening. Hello, good evening to you. Thank you so much for joining us on Money Talks. Welcome to the program.
Hello, good evening, Pastor Smart and Mr. Razak.
Good evening to you, madam. Welcome.
My name is Choma. I'm calling from Lekki area.
Welcome, Choma.
Okay, thank you for your clarification with regards to fintech. I want to ask, I see that a lot of fintechs are cropping up now. Is there anything regulating them? Because for people who are risk averse like me, how are you protected? Because I see a lot of them really. It's easy to open accounts. It's easy to, some of them you apply for loans, but there's no physical office. So what kind of protection are you assured of as a customer for you to just not see any physical address or physical bank? You just transfer money, you open account on your phone, virtual. What's the protection? Is there anything CABN has done to ensure that customers are not stranded
You're not
with their money
scam.
and
Let's
all
use
that.
the word.
Exactly. Scam.
Okay.
Yes, thank you for that word. Yes,
Chema, thank you so much. We're going to advance to that. It looks like it does appear as though Choma is prying into our script right here, because I was going to ask you the way you were going. Okay, we'll have another call on the line. You have to turn down the volume on your radio. Good evening to you.
Yes, hello, good evening, Captain Smart.
Thank you for calling.
Yes, what's with Captain Smart and can you hear me? Captain
Yes,
Smart?
you're already on the program. Tell us your own name and where you're calling us from.
Okay, my name is Ololami. I'm on the road. I've been listening to the Money Talk program. It's very enlightening and an eye-opener. But I want to find out, because I have a son that actually have interest in accounting. He wants to read accounting. But like at the secondary school level, he was not allowed to do the data processing, which is more of, data, computer programming. So I don't know, incorporating data processing into the curriculum of an accounting student. I don't know why the Nigerian educational system, they are not looking at that. That is one. Then two, for you to also have a knowledge in FinTech, what do you need as your basic requirement in terms of qualification or maybe let's say for you to have a degree in FinTech, what do you need to have? Can you hear me?
Yes, we can. Thank you, Ololami. Your question is noted. I'm sure you get the answer. So, Razaq, you need to answer those two questions in line with the next question I was going to ask you. The way you were talking about this FinTech, you're just painting a very good picture. Like this is walk in the park. I mean, this is heaven on earth.
Did I do that?
That's what you're making it look like. Look, the moment you embrace FinTech, I mean, all our problems are over. I wish you're painting the good side. So it is to ask you, just like with anything in life, you have the pros and cons. The good side there's the bad side is there. The risks, that's what we're going to right now. Like the first caller said, I mean, this is FinTech. This is driven by technology. We don't see these people. If you go to a physical bank branch, I mean, if push comes to shove, you can jack the manager. You go hold on for tie. But this FinTech is online. You go there, www.whateverfintech.com, and they tell you this site is not available. Your money, OT-law,
Is it? That's a very critical question, right? Regulation. And I will speak to that in some more details. Now, the FinTech ecosystem has different verticals. So there is the payment vertical, there is the banking or credit vertical, there is the investment vertical, there is insurance, like InsurTech, right? So each of these verticals has different regulators, right? So anything that has to do with payments, credits, or banking generally usually falls under the purview of the Central Bank of Nigeria. So any FinTech company that is offering any service that pertains to payment, that pertains to credit, or that pertains to banking must have a license from the Central Bank of Nigeria. That is very critical.
So they're regulated by the CBN.
By the CBN.
Okay.
Right. Then, if you're doing anything around insurance, you are regulated by the National Insurance Commission. So there is a regulator.
That's NICOM.
If you're doing anything investments, you must be regulated by the Securities and Exchange Commission.
So fintech organizations can operate in these subsectors you have talked about. So it's not just banking.
No.
When we're talking fintech, we're not just taking banking.
Banking, no.
All right.
We're not just talking banking. It cuts across payment, it cuts across insurance, it cuts across investment, it cuts across banking, right? Now, the most important thing is understanding which of the regulators is actually regulating the fintech, what service you are trying to patronize. And I'll speak to two of them. For SEC, for example, if you are a fund manager, there is something called the custodian structure, right? Which forces every fund manager to have a third-party custodian. So if you're investing with a company A who is registered with, who is licensed by Securities and Exchange Commission, you must have an external custodian where customers' funds are actually held on behalf of the customer, right? So more or less like there is a third party who oversees your money, and the money doesn't sit on the balance sheet of the fund manager. For the banking sector, for credit and savings and so on and so forth, there is the Deposit Insurance Corporation. Even though we can argue over whether that is adequate or not, because the maximum is around 500,000, but at least there is some form of insurance for those who have low deposit, right? So it is very important that that understanding exists before you patronize any fintech solution. But we can't also rule out the possibility that we have a lot of other fintechs out there that are not regulated, right? And that is a function of how far can they actually go before they get regulated. But let me also point out something which is very vital. For the fact that a player is regulated doesn't mean a player can fail. Because we've seen regulated entities who failed in the past. The most important thing is that the failure, the surface area of the failure is limited to what is acceptable by the regulators, right? So you can't, for example, a regulator cannot approve or license an entity that is obviously a scam. So if you have a license and you are patronizing an entity that is licensed, you can to some extent be assured that this is not a scam. But can misgovernance or lack of corporate governance be responsible for the failure of that entity? Yes. But there will be a recourse to what the regulators can do when that happens. To some extent, you are protected, right? So it is very important that we understand which regulator is regulating which fintech arm and which one you are patronizing. Then in terms of the risk that comes from access to fintech generally, or the proliferation of fintech and the huge demand for fintech services, I think it's something that also needs not just education, but also some form of monitoring. Because the service level for fintech is largely via digital. They provide services via digital channel. The surface area of risk digitally has also increased. So you see people being scammed, not just because the underlying investment is a scam, but because people compromise other people's credentials. If I have access to an investment account, for example, just because I have access to your email, I have access to your password, people could compromise that account and move money out, right? Of course, you wouldn't be able to do that if it's a physical location. But because everything is digital, then there is that possibility. But the interesting thing about that kind of a loss of money is that there is usually a digital trail that can be traced, even though it can be very, very strenuous sometimes. But there's usually digital trail. So the most important thing to note is for every service you patronize, try to understand which regulator is actually licensing that company. That is very important because that takes a substantial part of the risk away from you. But that doesn't mean the risk is zero. Of course, if you're investing in stocks, the regulator won't protect the stock price from going down.
There's some sort of risk.
There's some form of risk
associated
with investment. But what you are sure of is that the regulator as a third party will have the interest of the retail investors at heart by making sure that the players, play by the books and they won't do anything funny at the detriment of the retail investors. That's
right. In case you're just joining now, this is Money Talks on 92.3 Inspiration FM. You can call us 0817-313-6193. We can take one more call. Hello, good evening to you.
Okay, good evening, Captain Smart, and good evening, Razaq, if I'm right.
Yeah,
Razaq.
My name is Princess EJ. I have two questions. You've actually answered, somebody has asked one of the questions I wanted to ask. The other one is, I know there are some fintech that are unregulated. Is there anything that central banks could do to protect? Yes, you're meant to patronize the, of course, regulated ones, but we have the literacy level in the country is too high. What's the goal in curtailing the operations of these unregulated ones and who scam people? And we have a lot of people having losses that they never planned in their hands. Okay. My other question is if the central bank, if it's possible actually for them to ensure that they up the like for the banking sector, I know that NBIC insures up to 500,000. But is it possible that the central bank can also inch up this limit so that people also cut down losses when such things happen?
Princess,
of the banking sector, I can't talk of the stock market and all of that because, like you said, the price of stock, if it goes down, nobody can.
Thank you, Princess. Thank you, Princess. Yeah, Razaq, that's a tall order. We have just like 2 minutes left on the program, and we still have, maybe you just add this to the other ones you're answering. Well, I want you to speak to, as you answer that, the relationship between, these fintechs with regular financial institutions. In some quarters, they tell you that the fintechs are a threat to the traditional financial institutions, because these fintechs are everywhere now, that they're a threat. And then how can, prospective consumers have access to the services offered by this fintech? And Ololami is still saying, how can someone be a fintech guru like your guest, asking, why Nigerian secondary school not allowing account student to include data processing on the SSC? The first question. All of this in 2 minutes. I know it's a tall order.
Yeah, very tall order. So I think it's a mix of the relationship between fintech and the legacy financial service providers. Yeah. I think it's a mix of both. It's both competition and cooperation, right? To some extent, there are fintechs that ride on the rail of legacy financial service providers, right? More or less like partnering with them to ensure that they provide services and bring in new set of customers that the legacy financial service providers ordinarily won't be able to bank or won't be able to provide service to. So that's more or less like increasing the pie scenario, right? Then there are instances where fintechs will actually go head on to compete, right? So where they'll take the pie from you, right? But it's a mix of the two. It is not... And it's a mix of the two, likely. So it is not say that fintechs have come to kill legacy financial service providers or they are cooperating. It's a mix of the two, right? Then,
but they're in competition.
Yeah, they're in competition, no doubt. But they are also in cooperation.
Okay,
right. For example, there are fintech companies today that are built on the back of legacy financial service rails, right? More or less like a legacy financial service serving as a wholesale provider, while the fintech handles all the customer service interaction, channel delivery of services through different channels, data channels, and so on and so forth. More or less like opening up in new market segments completely, right?
Like it's in the value chain.
In the value chain.
Yeah.
So that's a corporation that enlarges the pie overall. But if I'm offering you credit, I'm definitely competing with the banks because the banks ordinarily should be offering you credit. But if I have a fintech company that is offering credit, definitely I'm not cooperating with the bank. There might be some form of cooperation with the bank as well, frankly, even at the credit stand, because the bank can provide the credit and then you provide the credit, can provide the credit to you and then you provide the credit to the...
And that's why it's expensive, with the fintechs.
It will be expensive.
Yeah.
But the expensive nature of the credit that fintechs currently provide, I think, is something that we also need to look at, right? If you're getting credit from banks, there are a lot of collaterals that you'll provide. But from some of the existing fintechs, most of the credit they provide are not collateralized.
They don't even need to know you.
They don't need to know you, which means that the risk they're carrying is actually pretty high. So we may not be able to agree on the appropriate pricing of that risk, because that is exactly what is reflected in the interest rates. I don't know you, but I'm willing to take the risk to give you credit. That will come at a cost. But if I know everything about you, I know where you live, I even have access to your property, definitely I'll be more comfortable to give you a loan at a lower rate. So the difference we've seen between the rate that fintechs are offering credits and the rate that the banks are offering credit is basically a difference that is defined by risk level.
Wow. There's a whole lot. It's a shame we've run out of time. I mean, the 30 minutes just flew by. But Razaq,
I can't believe that.
Razaq, thank you so much for coming. It's quite an education you have given us on the program this evening. I'm sure we'll talk with the producer, Yemi, to see how you can come back to complete what you've started today. But very enlightening, like one caller said. Razaq Ahmed is, of course, the co-founder and chief executive officer Cowrywise. It's a fund management firm and is registered by the Securities and Exchange Commission. Thank you so much, Razaq, for coming today. We appreciate you.
Thank you, Mr. Smart.
Yeah, that's our program this evening. Join us again next Monday at 4:30 p.m. for a fresh package. Smart Uzechi is my name.